Hello, my friends. Today is January 28th, and this is my January FOMC debrief. Now, the press conference just ended, and it really was as boring as expected. But before we talk about what happened today, let's level set a little bit. Now, the last time we had a meeting was in December, and the FOMC did cut rates. Now, between then and now, data has come in basically just okay. I mean, job growth is okay. Seems like we have some improvements in surveys, and inflation was okay as well. At the end of the, at the end of the day, we're basically where we were just last month. Economy is low higher, low fire. Inflation is a bit above 2%. Now, heading into today's meeting, there was widespread expectation that nothing would happen. The market was pricing in 0% chance, basically, of any rate cut. So, what I was most interested in hearing about in this meeting was what Chair Powell's plans were for when his chairmanship ends in May. Now, when you are a Fed chair and your chairmanship ends, historically speaking, you resign from the Fed, and then the president gets to appoint someone else. For Chair Powell, though, his term as governor, so if he stepped down from chair, he would be a normal governor, doesn't end until a few years later. So he has the option of staying on. It would be rare. I mean, it's happened before, but it would be uncommon. He's been closely guarded about his plans, and of course, if he were to resign, then the President Trump would be able to appoint a new governor. So you would have a more politicized Fed. So in any case, today's first starting with a statement. Now the statement just modest upgrades into the economic outlook. That's true. What was most interesting to me was that we actually had two dissents. One from Governor Waller. I think that was very surprising. Governor Waller, we think of as more of a centrist governor. However, he is one of the candidates to be Fed chair. And of course, you only get one shot at being Fed chair, so I think it's totally understandable if he were to, maybe dissent a little bit to improve his chances. I think we would all do the same. The second dissent was Governor Myron. Now, Governor Myron, we've been seeing him dissent some time. So that was expected. What was a little bit different now, though, is that in the past, Governor Myron has dissented and called for 50 basis points. This time, he's just dissenting and calling for 25 basis point cut instead. So it looks like he is moderating his stance. That's probably going to make him a bit more persuasive when he talks to other people at the Fed. He won't seem like such an outlier. Now, moving on to the press conference. So, yeah, it's not much going on, really. Just Chair Powell was asked explicitly whether or not he would, what his plans were after his chairmanship ends. And, he's still not really revealing that. That's kind of a big trump card he holds. If he were to stay, he would very much be a shadow Fed chair and be able to, I think, still wield significant influence over how the rest of the FOMC would view. So we don't get any information on that at the moment. I think the most interesting things that came up during the press conference were one about questions about whether or not foreign investors are hedging their dollar exposure. So remember last April, we had a big sell America trade. The dollar's weakened significantly. And the past week, it's been weakening again in the aftershocks of the Davos escalation there. So the BIS had a research piece out a few months ago, or maybe sometime last year, saying that, foreigners are still holding U.S. assets. They're just hedging their dollar exposure. Now, that has always been very suspect to me, because when you hedge your dollar exposure and when everyone is jumping to hedge it, you will see that in pricing through the FX swap basis. You would become more negative. But as I've commented before on Twitter, if everyone was hedging, then why is the FX swap basis basically not very negative, actually sometimes positive? So that's just a story that you got to respect what the BIS is putting in. I actually think they do really good work, but it doesn't seem to be consistent with market pricing. And when asked about that today, Chair Powell basically said he doesn't really see people hedging their dollar exposure. So that was, I think, a really interesting informational tidbit. And from the aggregate fund flow data, it's really obvious that foreign investors continue to pour into dollar assets. Now, the second thing I think that I found interesting is more of the topic du jour, which is Chair Powell was asked about what he thought about these surging gold prices. Here's what he said.
As I'm sure you've noticed, gold and silver prices have experienced historic gains of late. And I'm wondering how much attention, if any, you pay to those moves and what message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Now, I can tell you as someone who used to work at the Fed really doesn't care about gold prices. For them, gold is really, listen, they're mostly standard PhD economists, so they think of gold as, it's just kind of a barbarous relic, as Keynes would say. It's not something that really says anything. Now, he also directly addresses the claim that this is some sort of loss of confidence, debasement, and so forth. But again, if this were true, then you would expect inflation expectations to be rising, right? In a fiat currency regime, debasement means inflation. It means that your currency is able to buy fewer goods and services. But if you look at what the market traded at inflation break-evens are implying, you just don't really see that. So I continue to think that what you're really seeing is just a lot of momentum chasing, a lot of people, the same people who've been buying NFTs, meme coins, and so forth. They're still around and they're still kind of speculating. I will also note, though, that there are heightened Iran war headlines, and so that could be impacting this as well. All right, so overall, pretty uneventful for the next move in monetary policy. I think we really need to pay attention to the White House because any moment now, as they've been saying for some time, they could announce the next Fed chair. All right, talk to you all this weekend.